Hello and welcome to this week's fundamental and technical supply and demand trading analysis. So again, things are basically based on the tariffs again this week, with fundamentals slightly starting to come back into the picture. So I think my last week's fundamental analysis, I mentioned that I started to feel that the fundamentals were starting to slowly come back in, whereas a few weeks ago it was all based on tariffs. There was no, you can sort of get a feel for these things with the more articles you read. The analysis was all on the tariffs. Now we're starting to talk about GDP, inflation, interest rates, which is basically in more certain times when there's no risk off. That is what moves currencies, and when we are in stable times, it can be quite easy to, well not easy, but once you know what you're doing and once you've got better market conditions, it can be quite easier to trade, because we're basically going off a strong currency and a weak currency. So a strong currency that's got a lot of boxes ticked for it, so it's high inflation, high interest rates. Well, not necessarily high inflation, but inflation that's above the 2% target for the central bank, and high interest rates, and also high GDP as well, with unemployment down and the manufacturing and services PMIs doing well as well. So, but at the minute, guys, we're not in that period. We are still sort of in the tariff reality, unfortunately. So I'm just going to read Trading Economics week ahead here, so April the 28th. Sorry again, guys, as well that this is coming out late. I've actually been quite ill over the weekend, and I didn't get a chance to record this video, so I'm doing it now on the Monday. But we've not really missed anything really. To be fair, today is a really quiet day, so yeah, let's get into this now. So next week, investors will closely monitor developments in the ongoing US-China trade dispute, assessing the likelihood of potential de-escalation. So if that happens, that'll be basically good for risk on coming back into the market. So that's really what we want. I mean, the market the risk off moves have happened now. So your currencies like your Swiss franc, your Japanese yen, but as we know, the Japanese yen also works in risk on at the minute because they are in a hiking cycle. And gold as well. Gold has just gone crazy. We're really waiting for pullbacks on these currencies now, because they've sort of had the run. So what ideally we want now is for risk to come back on. So a US-China trade dispute de-escalation would actually be quite nice fundamentally, so things can get a bit easier to trade. Global earnings season will also take centre stage, with major companies such as Apple, Microsoft, Amazon, Meta set to release quarterly results. Also this week is packed with key economic data. Yes, it is. So it's a really busy week this week for data. There's quite a lot of important data coming out for quite a few countries. So yeah, I'll just have a quick look down here. We've got JOLTS job openings, which can move the markets. It's all about jobs, obviously. We've got retail sales and production, industrial production for Japan, which is quite big. Australian inflation rate, quote unquote, year on year. So that's obviously quite important as well. Unemployment rate for Germany. So look, we've got quite a lot of data. GDP for Europe, GDP month to month for Canada. And yeah, there's a lot of information coming out this week, so it'll be interesting to see if when we get these data releases, how much it moves the market and what the narrative is. We've also got the Japanese Bank of Japan interest rate decision as well. So they are expected to hold. They are at 0.5, which is still low, to be fair. But because they're on a hiking cycle, the market is pricing in rate hikes. But if they do come out dovish, basically because of the tariffs, maybe they're going to sort of come out and say, well, we're in a hiking cycle, but because of the tariffs, because of all this uncertainty, we're going to pause for quite a while. If they say that, Japanese yen will sort of be a bit of a less of a buy. But yeah, we're just going to have to wait and see what they come out with and say. The Bank of Japan quarterly outlook report, that'll be quite interesting. What else do we have? Retail sales for Swiss franc, ISM manufacturing PMI for America, unemployment rate for Japan. So we've got so much. Friday, inflation rate for the European Union on Friday, and then obviously non-farm payrolls and unemployment for America. So yeah, we've got a lot of data this week, which is good, because when we have data announcements, it normally adds a bit of volatility into the markets, and that's when you can get big moves, and that's when you can get in trades, and trades usually work out a bit quicker if there's more volatility. So it's good that the markets are coming back to fundamentals. We just have to see how much the data is actually going to affect the markets. So in Europe, market participants will analyse flash GDP inflation figures Eurozone. Yep. Meanwhile, the Bank of Japan is widely expected to keep rates unchanged. In China, all eyes will be on April PMI readings. So China, that's important. If China's doing well, obviously it affects Australian dollar, it affects New Zealand dollar. It's also a bit of a baseline reading for the global health of the economy. With China being such a big economy, if they're doing well, normally it's like a sort of like a bit of a test for the global economy. So that will be important to see how the tariffs have affected that. And then finally, in Australia, inflation data will be in the spotlight. So quickly going over the fundamentals, this chart is where I track all that data. So there might be some moves in this week. I'll just quickly go through the rankings. So United States still number one. However, as we know, the tariffs and all the things happening with America at the minute, the market is very forward thinking. So even though United States is number one, and I'll get into a little article by MUFG after this, even though United States is number one, the markets are sort of starting to sell the dollar, and we're starting to look at a potential long-term downtrend for the dollar. So yeah, there's that. United Kingdom number two. Bit of a weird one, the United Kingdom being number two, because I'm not reading much positive, many positive comments about the United Kingdom at the minute. I mean, the data's good. The data's okay. But yeah, for me, it's not a buy. It's not a strong buy at the minute anyway. Swiss franc, Switzerland's number 6, and this is a sell for me. We had a bit of a move up the last few weeks from risk off flows. However, now if risk on starts to come back in, Swiss franc will be a sell. New Zealand is again a sell for me. However, it's moved up 3 places, which technically is good. However, it's still in a quite a it's in the most cutting cycle than New Zealand. The New Zealand dollar, yeah, their central bank is cutting the most, I believe, at the minute. So they are a sell for me. Japan is number 4, and that's a buy for me, just plain and simply because of the hiking cycle that they're on. But like I said before, they do have their policy rate decision this week, so that will be interesting to keep an eye on. Euro's number 8, and as we said before, the euro and the United States, they're both ends of the spectrum in terms of rank. However, the euro has a lot going for it with the fiscal policy, and also money seems to be flowing into the euro and out of the dollar due to the tariffs and due to this sort of rearranging of global, not necessarily risk on assets, because I feel like the United States the economy of the United States is still, it's too big to sort of not become a safe haven overnight. Do you know what I mean? People are saying, the United States dollar is going to not be the reserve currency anymore. It's not going to be a risk on currency. That's not going to happen overnight. I mean, maybe in 10 years, if Trump has his way and completely rearranges everything, we might see that change, but for me it's not going to happen that quick. So, but yeah, the euro's number 8 on the fundamental chart, but it's got a lot of good things going for it at the minute. So for me it's a buy, and I did actually get in a euro NZD trade this week, which is in profit. Canadian dollar is number 7, which is quite a strong sell for me at the minute. You know, the data isn't good for the Canadian dollar, but it's not really got much else going for it in terms of tariffs as well, and we do have elections coming up as well, which is more uncertainty. So the Canadian dollar is one to watch for me. I'll be trying getting short on that. And finally, Australian dollar is number 2, and it's gone up 3 places. So potentially a buy for the Australian dollar if we start to get more of a risk on atmosphere in the markets. As we know, the Australian dollar is a high beta currency, so it moves more with risk on, money flows into it. But are we going to get risk on there, sustainably for a long time? I'm not sure. Not sure, because of the way the Trump's running America at the minute. He's trying to do some radical things with their economy, so we might not get stability for a while. So, but anyway, that's the current rankings. I will move on just to quickly to read a bit of this. This is from MUFG. Just have a sip of coffee. Excuse me. Oh. So long-term downtrend for the US dollar. So this is what I was saying before. As far back as Q1 2023, we expressed a view that the US dollar bull run that commenced in 2011 had come to an end, based on the Fed's Advanced Economies USD index hitting a high in September 2022. While the dollar advanced back towards those levels on Trump enthusiasm, we maintain that the record-long USD bull run has now turned, and a medium to long-term depreciation of the dollar is underway. This may be exacerbated by Trump and the associated uncertainties and damage to trade, but there were plenty of other factors that pointed this way prior to the tariff announcements. Overvaluation of the dollar, very expensive US equities, and the notable shift in the international financial market landscape will all add to scope for the dollar to decline. The ebb and flow of tariff speculation and the ultimate removal of current unsustainable tariff rates won't alter that outlook. So, and this is good as well. So they've actually recommended a long Euro NZD trade, so it's always nice when a bank comes out and recommends a long trade that you're in as well. So it just backs up that your analysis is correct and sort of you're on the right lines. But yeah, that it's quite interesting to see it happening now. The dollar, I'll just get the dollar index up here. It potentially coming into a bear market now. So if I just zoom out, I'll change this to monthly, and then so when did they say it was said? So around here, this is obviously the financial crisis, and then around here we've sort of just been making, slowly moving up, and a big spike there, that was COVID. But yeah, so a bit of a choppy trend, but we have, like the article said, since 2011 moving up. So if they're saying this, we're on a bear trend now, there's a lot of room to the downside here. There's a lot of room to the downside. So obviously we don't trade monthly candles, but it's just interesting to take a note of that the dollar might be a sell for the foreseeable. Now that's actually quite helpful for us as fundamental traders, because if banks are coming out and saying quite confidently, the dollar's going to be a sell to the medium to long term, that means that we can have a sell bias on the dollar against stronger currencies like the Japanese yen and the euro, and we can just basically buy at demand zones, on the Euro USD, which makes it a bit simpler for us. So yeah, and there's a number of reasons why this is happening for the dollar, and it's not necessarily bad for the country. Remember that just because a currency is going down doesn't mean it's not necessarily negative in that aspect. Because sometimes countries want a cheaper currency if they are basically quite a high exporting country. So the Swiss franc is one of those countries who would like a cheaper Swiss franc because they do a lot of exports. So yeah, moving on to the indexes. We'll do a bit of technical analysis on the dollar index. So last week we moved up into this supply zone here, and we did have a bit of reaction. I did actually get long on the dollar last week due to we were talking about how the dollar was quite cheap, basically quite oversold, and there was some positive there was a bit of positive news coming out for the dollar, something to do with Trump not firing Fed Chair Powell. So based off that, I took a small position on NZD USD, which did work out profitable. Wasn't the best trade. I took I risked a bit less, but yeah, I do feel like now though that the dollar is gonna potentially roll down to here. We are above 50 on the RSI, so actually I'm just going to draw a demand zone there. Oh. Don't know why I had one there anyway. Yeah, so ideally you'd want it to come up here and then you could sell down there. So that's the dollar index. Moving on to the euro equally weighted index. So we are still hovering at these highs. We've not really had a decent pullback in quite a while, to be fair. I did get, like I said, long on euro New Zealand dollar on when did I get long on that? It was here. I think it might have been last Friday, actually. Was it Friday? Yeah, it was Friday. So I am long on this currency pair, and it was around here that I got long when the US index it was under 50 on the RSI, and I thought it was worth a shot considering the euro New Zealand was sort of had a bit of a pullback now down to here, and there was a bit of a liquidity spike here. So yeah, I thought it was worth a trade. I'm going to try and hold. I've got a few positions anyway. I've got one that's here, and then really I want to try and retest these highs up here. But yeah, it's ideally I'd want a bit more of a pullback down to this fresher area of demand here, and then we can get a proper move up there. Yeah, for the last couple, even like the last 3 weeks, the markets have been quite choppy. When was that? 9th of April. Yeah, it's been a bit choppy. Not the best trading conditions, like I said. But yeah, that's the euro. If you want to sell the euro, the ECB did come out and they were quite dovish last week. So if we can get a move up to here, and then that'll be a nice area to sell any euro pairs. Moving on to the pound. So the pound is actually quite oversold at the minute. It's quite oversold. However, like I keep saying, the pound is a tricky one, man. It really is, because it's number 2 on the charts. There are reasons to buy and sell the pound. I've read quite a few people saying that the pound is well insulated from tariffs, which is true, to be fair. We are well insulated from tariffs because our economy is very service based, and that we're not a massively producing nation. We used to be, but we don't have many factories. I mean, obviously we do make some stuff, but nothing compared to other countries. So if Trump says he's going to tariff us, well, it's not really going to affect us. So that is one positive for the pound. I can't remember who it was now. Someone came out and said tariffs are deflationary as well for the pound. So that's on the other side. That's quite bearish for the pound. So to be fair, if you do want to sell the pound now would be a good time to sell. We are in this supply zone here, and we're at the highs, so this could be actually quite nice. Just depends what currency pair you choose. Maybe pound dollar. But pound dollar is still at these highs, so I'd want a pullback really to get long on the pound. Maybe pound New Zealand. Yep, actually you can see that's making moves to the upside right now. So that would have been a nice trade to... Oh no, sorry. We're shorting the pound, aren't we? We're shorting the pound, we're not buying the pound. So actually, pound dollar would be nice, because we're at these highs now. It's just if you want to buy the dollar, possibly not. And this is all we do, guys. When we're trading, we obviously have our fundamental bias, and then we're just looking for divergences. So obviously the pound's expensive, so you want to sell something when it's expensive because you get more for it. But because Forex is in pairs, you need to find a pair to sell. So let's have a think. Euro pound. We do want to be a buyer of the euro fundamentally. But the euro isn't really, like I said, I want a bit of a better pullback on the euro. JPY actually, yeah. So the Japanese yen is actually oversold on the index, which is very nice. That is very nice actually. So pound yen, could we potentially get a sell on here? Now unfortunately we're not really in a demand zone, so I'd really want it to get up there in this demand zone, and then we could get that'd be actually really nice. And then we could get a trade potentially down to here. But yeah, I mean, I do have other strategies when we aren't in supply and demand zones. There are other strategies you can take, such as simple support and resistance. But if I am doing that, I normally like to go for some sort of liquidity hunt trade. So I mean, this isn't not the most obvious level of support and resistance. It's not really the best level. I mean, the level seems a bit higher up about here. You can see support, resistance, support, and then if we change it to daily, and if I just draw this line, yeah, look at that, resistance. And then yeah, acts as support there. Move that up like that. So it's look at that there again. Resistance there, support there. Yeah, so this is definitely quite a strong level actually. But it's a bit higher up, unfortunately. So yeah, that is unfortunate. But yeah, so basically I'd rather wait for it to get up here, come down and then maybe spike above the level, and then we can get back in. I want to see something like this. But ideally, if it can get up to here, which I'm not sure it can because the pound is expensive at the minute, this would be the best trade for me in this strong supply zone here. But yeah, like I said, the pound is a tricky one for me at the minute because it's not as clear for me. I mean, if anyone's got a clearer analysis on the pound, put it in the comments, enlighten me. But you know, it's, for me, from what I'm reading, it's just not that clear. So when it's not clear, it's normally best just to pick another pair, because we do have, you know, we've got quite a few choices to trade. Anyway, moving on to the Canadian dollar. So we did move up into these highs last week, and it looks like the Canadian dollar is starting to sell off now, and we could possibly retest this low, or even retest this low here. The fundamentals are pointing to the CAD being a sell. It has moved down 3 places recently, and we've got quite a lot of fundamentals coming out this week, fundamental data for all the currencies really, but for the CAD as well. We've got GDP, I think, and a couple others. So yeah, I mean, we have come below 50 here on the RSI. So what I would want personally, you know, the best trade, I'd want another pullback up, and then we can get short. I am in another trade actually. I've set some pending orders. Looks like it's gone without me potentially. Yeah, I set some pending orders on this trade here. I'll just show you. Oh, that has gone, hasn't it? Damn it. You know, I've been trading for a good 5-6 years now, and I still get FOMO, you know. I still get FOMO. I know I shouldn't. You know, my logical self says, you know, you shouldn't get FOMO. That's what they tell you. You shouldn't want to get all excited about a trade, and if you miss a trade, you know, there's always going to be another opportunity. It's the Forex market. There are opportunities so much. But when you miss a trade like this and you see it going, I can't help but just feel like, oh damn, I wish I was in there, because I would have got a 1-to-1. No, not yet. Close though. I mean, you never know, this might come back. What I'm probably going to do now is wait for this 22-hour candle to close, which is another 3 hours, and set a new pending order based on this 22-hour candle. Because basically we had this candle here. Just get rid of these, make it a bit clearer. So yeah, we had, see this red pin bar sort of candle here. This was an 11-hour candle, and that closed at 9 this morning. But because I've been ill, I think at 9 this morning I was in bed dead. So I've missed that. And then when I got to the charts a bit later on, I set my pending orders, but it's already gone without me, which is a bit annoying. But here's what it is. I mean, it actually probably would have missed me anyway unless I put my entry a bit further forward. So usually I'd put my entry on that line there, so it would have actually probably missed me unless I... How many pips did it miss it by? About 2 pips. Came up and then went. So yeah, I do have some pending orders. You never know, it could come back. I mean, if I go to this 22-hour candle here, there's a similar situation up here. See this 22-hour candle? So if I just put this on this one here, so this has moved quite a bit. I'm just going to compare the candles. So that's moved down about that much there. about there. And then if you would have set a pending order on this one, this came back up from down there, and it would have triggered you in. Oh no, sorry, it would have been there. Sorry, one sec, what am I doing here? There. So to be fair, yeah, if we, I'm just going to have to wait for this 22-hour candle now. Wait for this one to close. If we sort of stay at these levels, it is possible, because it's done it here. It did it here a few weeks ago. It is possible you get a pullback to 50% of the candle, triggers me in, and then we go down, potentially down to here. So yeah, I've got football later, so when I get back about 8 o'clock, I will come back to the charts and just check on how this is going. But it looks like to me it's off. Yeah. So that is that, unfortunately. But yeah, we might get a pullback, but it has moved a decent 54 pips, which it's not too bad, to be fair. It's not too bad. Anyway, so that is the CAD. So I do want to be a seller of the CAD, but looks like I missed a bit of a setup there, unfortunately. But yeah, not a lot going for it, the CAD at the minute. So that is a sell. So moving on to the Australian dollar. We did actually break this supply zone, and we've made a demand zone there. I'll just draw that out there. So you can see we sort of moved up, we moved down, and then we moved all the way up here. So there's a demand in this price area here. Again, Australian dollar, not the strongest buy at the minute with all this uncertainty. If certainty comes back into the market, which, like I said, it's probably not going to be very soon, but if it does, the Australian dollar might become a strong buy. So any buys in demand zones when that happens, but for me it's a bit of a grey currency at the minute. So yeah, if we want to sell the Australian dollar, we're probably looking to get up to here, to this. This is a strong supply zone. Look how far it went down here. Excuse me, let's have another bit of coffee. So yeah, that's Australian dollar, and again similar, the New Zealand dollar. We did actually come into this supply zone last week, and did I show you this trade? Euro New Zealand, yeah I did actually. Euro New Zealand dollar, so I am in this trade. Which looks like it's finally moving. This is what I mean by liquidity hunt as well, guys. See this spike here, what this will have been. So price is moving up, in a steady sort of structure. It moved up again. A lot of people will have, got along maybe at this pullback here, put their stops behind this red candle here, or maybe just here at this one. I'll be safe, I'll put it down here, and then it moves up, and then traders will think, oh, this is a winning trade now. And then it comes down, takes all that liquidity down here, and then fires up again. You see it so many times in the market. You've seen it here as well. This is where I saw actually that it potentially was a liquidity hunt. On a higher time frame, you've got the wick and the wick there as well. So yeah, that's basically. I've not explained it very well there, but that is a liquidity hunt to me. It looks like a liquidity hunt, just of the way it's moved. It's moved down here underneath it. People will be putting the stop losses here and here. It's moved down, taken them out, and it's shot up. So that's why I usually like to have a wider stop if I can. Obviously the risk reward is less if you use a wider stop, but it's always best to use a wider stop, in my opinion. And at the markets, at the market lows, So yeah, I am long this. So hopefully that can retest these highs at this supply zone, and hopefully even higher potentially up here, because fundamentally these two currencies are diverging. I mean, the dovishness from the ECB won't help, but I think the euro's got some other things going for it, like the flows into the euro, being a safe haven currency in these tariff times instead of the dollar. I think that's got a lot. I think that's helping the euro out. So I'm just going to hold this and see what happens. But yeah, that's the New Zealand dollar index. We are below 50 now on the index, so that's something to keep an eye on in my trade. But I think it could even potentially go a bit further down to here. So maybe, we'll see. Hopefully this can go a bit higher today. But yeah, moving on to the Swiss franc. Swiss franc obviously fundamentally very weak. They've got really low interest rates, low inflation, so that is bearish for the currency. But they have come into this sort of area here, and I think I mentioned last week, if you did want to buy the Swiss franc, you wanted to get a bit of a pullback to here, and then it'd be a nice time to buy. We are in this area at the minute, so if we get any risk off coming back into the market, this could potentially be a nice place to buy the Swiss franc. We are below 50 on the RSI. Yeah, and it just looks like it's starting to change a little bit. Obviously, like I mentioned in the last few videos, the VIX is the fear gauge, so the volatility S&P 500 index. So this usually spikes when you get risk off, so it's a good gauge to determine if you're in risk off or risk on. Usually when it's above 20, that's when you're in risk averse conditions. Obviously, this is COVID, and this is the financial crisis here, 2008. So this is a good little tool just to use to determine if markets are in risk on or risk off. So at the minute we have come down, but we are still above 20. So potentially the Swiss franc could be a nice buy. Obviously you just got to pick the pair. For me, probably NZD. Just have a look at this. Where are we? We have actually. So that looks quite nice to me, actually. If this finishes like this, that will actually create a bit of a supply zone there. A bit like that. And then what we want really, prices to move down a little bit, create that demand, create that supply zone, come back up to about here, and then we can get short here. That'll be quite a nice setup if it materializes. But yeah, Plummet, we've not been this low in forever, I don't think. Let me just change it to monthly. Yeah, I think we're at all-time lows actually on the New Zealand Swiss franc. We are at all-time lows. So yeah. When was this? 2004. Yeah, so we've never actually been this low on the New Zealand Swiss franc, which is a sign of the times. But yeah, that's looking quite nice. And finally, Japanese yen. We have made a new supply zone last week, so I'll move down, 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 around there. It's quite a few supply zones now. And yeah, like I said, we are quite oversold on the RSI, which would be a nice time to buy at the minute. Unfortunately, we're not really in a demand zone. Nearest demand zone's down here. That'd be quite nice. And then sells would be probably up here somewhere, and then get sell. But really, I want to be a buyer of the Japanese yen. It's got a lot going for it at the minute, fundamentally, and risk off flows as well. So yeah, guys, that is the indexes. Moving on to, I'll quickly run through the majors and then I'll call it a day there. So euro dollar, we are in this demand zone at the minute. Yeah, not really any setups happening for me. Really, I'd want a pull down to here, and then we can get some buys down here at this level here, or some sort of liquidity hunt. So yeah, that's the euro dollar. Euro pound, looks like we're going to break this demand zone today. So yeah, at the minute, if we break this demand zone, what we really want to see is a move down, a move up, a move down to create another demand zone, and then a move down into that demand zone, and then we can get buys. So we might be waiting a bit of a long time for this to get buys in on this currency. If you want to get sells, however, because like I keep saying, the pound is a tricky one. You can buy and sell the pound, so it's probably going to range. If we get prices moving up to here, this is quite a nice supply zone now, and you've got a bit of support and resistance confluence, so this could be quite nice sells for the euro pound. It just depends if you want to get long on the pound. Is the euro the best currency to go against, because you know it's got so much going for it at the minute. However, things could change, so if you get some negative narratives coming out for the euro, this could be a nice area to get short on this pair. And if I zoom out again, yeah, see, it's quite an obvious level of support and resistance. So yeah, that's that one. Pound dollar, we are at these highs now. So like I was saying before, the pound is at the highs on the index, and the dollar is sort of at lows. So you could potentially get a risky trade to the short side on this one. But there's just so much negative sentiment around the dollar as well. So yeah, a tricky one really. I'm probably going to stay out. But yeah, looks like it's going to start. It's created a sort of range now, so we could start to see maybe a bit of a range happening at these highs like this. Who knows? But yeah, that's the pound dollar. USD CAD, sort of just chopping around at these lows now. So yeah, we are in a demand zone technically, but I don't really like it. The CAD is weak, so I'm a seller of the CAD, but the markets aren't happy with the dollar at the minute. You know, usually if the dollar was strong, the dollar would probably bounce from these sort of levels, and you get a decent move to the upside. But the price action is showing that there aren't many buyers for the dollar at the minute, even against weak currencies like the CAD, which is saying something. So yeah, not for me at the minute. USD JPY, now this is something I want to potentially get involved in now. I think I said last week, where were we? That's Monday. Oh no, so So last week, if you go to last week's analysis video, I think we finished the week here, and what I said was if we get a move down to create a bit of a better supply zone and then a move up, this is where I potentially want to get short. And what has it done? It's done exactly that. So I'm looking to get short potentially around here. Now the only thing that sort of bothers me about this trade, we are over 50 on the RSI. We're not an extreme. On the 9 hour we are an extreme here, and we did make an outside candle here actually. And if we go to the 10 hour, there's an outside candle on the 10 hour. 11 hours looking good as well, and then the 22 hour, you know, we've come up and we've created an outside candle here. So if this finishes like this, I might set some pending orders to, you know, come back, trigger me in, and then we can make a move to the downside. But yeah, the only thing that bothers me about this trade is we are technically still at the lows. So if I change it to the 1 month time frame and then I change it to the baseline, so see where it's green, that is where it's expensive in the context of 1 month's movements. We want a pullback up to above where it changes to green. Do you know what I mean? So in 1 month's context, where it's green is basically where it's expensive, where there's value to sell, and obviously where it's red is saying where it's cheap, where it's value to buy. Now obviously it's not as black and white as that, because fundamentals can change the goalposts. So, you know, if we move down and something comes out and prices move, you know, all the way down, you know, down here within a few days, well, look what's happened. Now it's green here. Do you know what I mean? Does that make sense? So look at the way it moves. So if you get a strong move down very quickly, it's green there. So, but if I change it back to what, so where are we at? 1 month. Oh, wait a minute. I don't know what happened there. So yeah, 1 month. So really, we want a pullback up to that supply zone there. In terms of value. But considering the other factors like the fundamental divergence that this pair potentially has, I mean, I'm willing to enter a trade here, and what I'll do is I'll just risk less of a position. I won't put a full position on. So yeah, but knowing my luck, it'll end up being a winning trade, and I would have risked less. But that's what you got to do. You got to manage your risk, essentially. So yeah, if this candle finishes like this, I will probably enter this trade, because there is some potential downside. So if we just quickly do that, what's 103, 103.50, so 120, something like that. Yeah, so the potential for one-to-ones there, and then if we retest the lows, that's, you know, that's it, that's 2-to-1. So the downside potential is there. There is space to the downside. But yeah, I'll probably just have a smaller position. But yeah, that's USD JPY, USD Swiss franc. Again, two weak currencies really. If we get risk off though, the Swiss franc might come back into power. So what we want is a pullback into there. That'd be quite nice. I think I said this last week. I said, you know, it might not get up there, but it is edging closer. So maybe a week or two we might get up to this strong supply zone, and then if we get any negative risk off sort of headlines, this would be quite a nice place to sell. So that's what I'll be watching for anyway. Aussie dollar, yeah, nothing there really. It's been very choppy. No new demand zones really. I mean, what's that there? Nah, I'm not going to draw that. No new demand or supply zones. Yeah, not really much I can say about this pair. I'm not going to trade it at the minute anyway. So finally, New Zealand dollar. Like I said, I did get a little trade on this last week. Made a bit of a one-to-one, but because it's the divergences aren't that strong at the minute between the dollar and the New Zealand dollar, it didn't really move much. So yeah, I mean, the whole idea behind the dollar was basically that it was very cheap. We had a little bit of good news, so there might have been a bit of a relief rally, and also a bit of profit taken as well, because obviously markets can't move down forever. You know, there has to be a point where there is a bit of a bounce back. So that's what the trade was basically about. It was a bit of a bounce back trade, a bit of a technical trade, a bit of a value trade. You know, the dollar was quite cheap. Yeah, had a bit of good news. So yeah, we made a little bit of money on that, but not the best trade, to be honest. And at the minute we're still sort of chopping around these highs. So yeah, that's basically it, guys. Thank you for joining me. I hope that was helpful. Yeah, it's going to be another interesting week. We've got a lot of data to come out. Hopefully some news about the tariffs. Hopefully some news about the de-escalation between China and USA. That would help things get a bit easier and a bit more simpler. But yeah, apart from that, guys, thank you for joining me. If you've got any questions, leave them in the comments. I'm going to go get a lens sip because my throat is killing me again. And yeah, take care, and I will see you on the next one.